Hello guys, welcome back. We'll be doing a look ahead video for the current week. The date is the 19th of March, 10:51 a.m. GMT time, and I opted to wait for the market to open this week before I do a review. Excuse me, before I do a review video, as I feel it was going to be a muted open during Sunday, which it was. But we seem to have had some movement now, which is good because we have some more levels to work with. Now, in my personal opinion, I believe the dollar is bearish and will continue to be bearish, going into the later months. But at the minute, because we're going sideways and have been for a while, and I don't need to show you the dollar chart to for you to know that the dollar's been going sideways because the euro's been going sideways. Obviously, it's the inverse, pretty much the same, but the opposite. And we don't really have a lot to work with. Obviously, trading in a range, which makes picking entries a little bit more challenging. When the market's trending, trading is relatively easy. But when the market's going sideways, it can become a bit of a challenge. And it's a bit tricky because sometimes you can get yourself into trouble taking trades that are less than favourable. We don't really get the lift that we're expecting sometimes. So just looking at the euro here, I mean, if we go out to a weekly, take that off, I don't know what that is, but if we go out to the weekly, you can see again, which we've marked this out a few times, but this previous level is causing a lot of resistance, and their working price in here been here for weeks, but the overall structure, in my opinion, is bullish, and I will continue to be bullish on euro until something changes. But we need some sort of pop on the dollar, because until the dollar really sort of gets its legs and starts moving, nothing else is going to move either. We may get a few pops here and there. I know cable has had a nice little pop today, but the Euro USD is just basically flat. Just going back to the daily, and I'll take this off. I just wanted to sort of outline why we're stuck in this range. You can see that we've taken out this swing high here, and I'll mark it off. You can see we took out the swing high here with this candle, and then we took out the swing low with this candle. So we've taken liquidity both sides of the markets, or both sides of the market, should I say, and we have sort of internal range here, meaning if this is the full range that we're working with, the up down up down up down, you clearly see it. It's not that difficult to understand. From here to here is effectively the full range of the consolidation, and we're stuck within that range, and then we've got a smaller range here, so it's challenging. It's challenging, and where we are right now, I mean, there is a very small inefficiency just down here. So if the market does, or if the euro does, ideally pop down into this level, the reaction that we get from that could tell us where we want to, where the sort of euro wants to be going. And I've been saying this for a while, but I actually want the dollar to go up first and then resume its downtrend, because if it does that and takes out liquidity to the upside, there's no reason for it to continue going higher. It can just resume its downtrend, and then we can start picking off longs on euro. But as it stands, like I said, at the minute, I'll have to drop down to a 4 hour just to give you a better idea of the structure itself. But you can see, we have this high up here, we have this low down here. Had a really nice push away from it. We've come down, failed to make higher highs, so we've got a lower high here. We've come down again, and again we're in that sort of area where euro could go one of two ways. And there's lots of different reasons why we could say, well, there's support down here, or there's an inefficiency down here, or there is an indicator that says it's going to go. You see what I mean? There's lots and lots and lots of different reasons why it could go up or it could go down, and this is why trading can be a little bit challenging when you're trading within consolidations. If you have an overall bias, for argument's sake, let's say your bias is bullish on euro. Okay, and you're not changing your stance because you believe that long-term euro is bullish. Well, that's perfect, that's fine. The issue is, where do you get in? Do you take a shot and get in right now and put your stop just below here? Do you take a shot when you break these highs? Do you take a shot when you break this high? Do you wait for it to come all the way down, break this low, and then take a long? All of these things, or ideas, they become challenging because when you're stuck in a consolidation, you don't know really which of the market structure changes or shifts based on the swing highs and the swing lows, or the support, the resistance, or the levels that you have marked off are going to be the ones that are going to give you a nice little lift on price. So for me personally, what I like to do is I like to wait for clear signs of a directional move. And we do have some tools that help us, which we incorporate, but until we get a decent lift, there's not really a great deal I can do on euro. What I would like to see, and for me, this is a nice area, I believe, that if we get through this, should help us with our directional bias and give us a better indication. But I would like to see euro get through this convincingly, and if euro can get through this convincingly, we get a nice pop in, retest, and off we go. Then this I'd like to see that. If we go lower first, I'd like to see the reaction first. So if it goes down, I want to see the reaction, and then potentially look for a long down here. But either way, you're talking about 80 to 90 pips to the downside first, or realistically, I'd like to see the same sort of 80 pips higher, then a retest, and then a lift off. So again, I'm not pushing it. One could argue, well, why not take a short here? If you believe that it could potentially be coming lower to fill in this inefficiency and maybe challenge this low, why not take a short? That's the problem. I'm bullish on euro, and I'm bearish on dollar. And this week we have FOMC speakers, and this week we also have the Fed rate announcement, which obviously is going to affect the marketplace, and it's going to send the dollar all over the place, which will in turn send the euro all over the place. So it's just something to be aware of. And we have the same for the pound as well, which again can affect the euro based on the euro GBP. So and I'll just apologise now, guys. My throat's really croaky. I've been suffering with my throat for the last sort of week or so, week and a half. So I do apologise if I'm coming across like really croaky. But again, like I said, I'm being very patient with euro. I don't want to be forcing a trade, especially during a week like this when we have so much news coming out, high impact news. I want to take my time and just be cautious, and I'll just do this now. Sorry guys, just before the phone rings. I've got a funny feeling it's going to ring. So that's where we stand with the euro. For me, like I said, I'd either want to see a lift first, a move in, and then off we go. If it comes, and the reason I'm not marking the downside is because if it does come to the downside, it may happen, I don't know, but if it comes to the downside first, I want to see the reaction first. And then, then we can reassess down here. Just looking at the euro GBP, you can see that we've obviously had, we had a move back up to the top of this whole consolidation, and then we've had a complete retrace all the way back down. And it wouldn't surprise me if it goes a little bit lower and then kind of pops up again and then just carries on going sideways. The down move on this is obviously the euro weakening against the pound, and as it's coming down, it should be doing one of two things. It should be either affecting the euro, which it hasn't today, okay, or affecting the cable, which it has today. So you can look at that as a very simple. If euro GBP is coming down and it's not affecting the euro USD, but you can clearly see that it's affecting the pound USD, then they're holding euro basically. You can see that the euro pair has been held in whatever range it's going to be held in, and then it will be released at some point. But like I said, listen, there's a lot of factors being taken into play this week because the pound's going to have their official bank rate announced on Thursday. And a lot of the action that's going to be happening before that rate announcement, both on Wednesday and Thursday for the for the dollar and for cable or pound in this case, makes a difference. Because they will be forerunning or putting the price at certain levels, to potentially be putting people on the wrong side of the market, and the rate announcement comes out, it goes the other way. There's a lot of factors. You have to kind of play detective and try and figure out which way the market should be going based on what you're seeing on the charts. But obviously we have a few other little tricks up our sleeve, which we will be incorporating. So just going back to the Euro GBP, I'm not really interested in this at the minute in terms of a trade. I mean, like I said, until it comes out of this trading range, the only thing that I'll be using this for is directional bias for the Euro USD and the Great British Pound USD. But for now, you can clearly see this has been going sideways for a good while, and there's nothing I can do with this. Going over to the USD CAD. USD CAD has had a really nice run up last week. You can see here, we had a pop up, took out the liquidity here, really nice retracement, and then last week, beautiful run up, and I do believe that we are going to be running up into the small level here, or this small area here, and I'll just pop one of these price points. It doesn't have to be exact, it's around about 131 to 132. I was going to say 131.90, but we'll just call it the 132 big figure, which is where I believe price is going to be going. So around about 112, 115 pips or so, which would make logical sense for it to come up here, and retest this small area here and this low here, which is just an old low. So this is where I'm expecting USD CAD to go. Will it give us, will it give us an entry? I don't know. We've got crude oil inventories this week as well. Again, something to be mindful of. The problem is with USD CAD, and this is a standard problem with USD CAD, is when it goes, it just keeps grinding and grinding. It makes it very difficult to get in. Unless you got in here, which would have been a little bit tricky because it just took out the liquidity, so a lot of people would have been expecting a deeper retracement. But it hasn't, it's just off it goes. And there's no real logical reason why it would have stopped here and carried on going higher. So we have to be a little bit cautious with this one. If for whatever reason it does manage to pull into this old high, just around about 80 pips away, then maybe there may be a trade there. Okay. And again, I'll just monitor this throughout the week and I'll let you guys know if I see something interesting. But that would be the first level for me in terms of taking any sort of entry before resuming higher. So we'll be keeping an eye on this, and I'll let you know if anything pops up on this. And then finally the Aussie dollar, which we can see again has had a really nice run lower. Personally, I think on the Aussie dollar, we could potentially be challenging this range here, which is around about 80 pips or so. So you're talking another 4 days range, basically, another 4 days range into this area. And then I would be expecting a higher move on Aussie dollar. So there's a lot of reasons why I think Aussie dollar is going higher. The interest rate's good on the Aussie dollar. There's a lot of fund accumulation. A lot of the data is pointing to a higher Aussie dollar. And a lot of people look at this and they think, well, hang on a second, to go to the daily because it's a bit more pronounced. You can see that we had this really nice run up. Excuse me, really nice run up. Quite a deep retracement. Now we're going even lower. Why in God's name would anybody want to be going long down here? Think about it. If we've gone all the way up and then all the way down, and everybody's and we've retraced pretty much the entire up move down here, it would be illogical for anybody to want to go long down here, which is exactly the reason why I would probably go long down here, because when charts move, okay, obviously you have to factor in sentiment, what people are saying, what people are thinking, and anybody who's been trading long enough to understand what I'm about to say will know, it's a truth. Generally, when the masses want to do one thing, you do the opposite, right? And generally that tends to keep you in good stead. As long as you've got good risk management, it keeps you in good stead. And a lot of people you know, if Aussie dollar gets down here, we'll be considering a short, because the first thing they're going to go to is here, below this old low. Sorry, excuse me, below this old low. So for me, I want to see it come down here first, see what the reaction is, and this may not happen this week. It is a 4 days range, but it may not happen this week. It may happen, you know, going into next week. So we may have to wait for it to come down to form some sort of a mini low, get a lift. There's a lot to factor in, but I'm not doing anything with Aussie dollar, because even if it goes up from here, I still wouldn't be comfortable taking a short into this level. I'd still prefer to just do whatever it's going to do, come down to this level first, then I can reassess and take any action necessary down here. So that's what I'm going to be looking for the Aussie dollar. It will take a little bit of time to form. Obviously, we monitor these things on a daily basis, and we can always, you know, readjust our strategy going forward. So going into this week, my main focus, honestly, is going to be either the euro or USD CAD. I want to see a move higher. Okay, ideally, you know, the dollar pops higher, tags the 91, and then starts to resume lower. But I am very, very cautious about Wednesday. It should, ideally, what generally tends to happen with these things is the rate announcement comes out. We get a, you know, some whipsawing, and then eventually the market will settle and then start to move in the direction, you know, that it's intending on going. When it does that, it kind of just clears things up for everybody, and we can all just go back to business, because right now, like I said, the dollar's been going sideways. It's making trading challenging. So bear that in mind, and we'll see what happens. Either a lift on the euro for me, take some sort of an entry here, or if it resumes lower, maybe look to take an entry somewhere down here as a long as well, because I am bullish Euro USD. And then just quickly going back over to the USD CAD, I'd like to see a retracement down into, and we'll just mark this off price level wise. I'd like to see a retracement down to the 131-ish, which is about 80 to 90 pips away, before I'd consider taking anything on the USD CAD. Alright, so that's where I'm at. Have a good trading week, guys. And we will catch up in the signal room and the chat room. Take care.